And welcome to today's episode of Life Insurance 101. Guys, today we're going to be discussing the importance of final expense for seniors. Right now, we see that there's a huge rising cost of, final expense costs. There's inflation going on, so the cost of goods and services is going up. So, how can senior citizens protect themselves from such costs and protect their loved ones? They don't pass on financial hardships. So, what we're noticing now is that obviously the baby boomers are still around. The baby boomers are in that age of retirement. They're in that age of passing on their legacy. So one thing that they don't want to pass on is hardships, right? Is cost of funeral, right? Because that could devastate a family. It could paint the picture for you. There's so many families that I sit with, and unfortunately what happens is, they're taking care of their elderly relatives, they're taking care of grandma, grandpa, they're taking care of their parents. And then unfortunately, elderly individuals that they're taking care of succumb to their sicknesses or injuries. And now the family has to bury their loved ones, and they got to pass around the hat. They got to go GoFundMe. And this is where you see a lot of turmoil between family members. You see a lot of turmoil between siblings, especially. And actually, it's the leading cause of why many siblings fight is, hey, I put this much to mom's funeral or dad's funeral. How much are you going to put? Wait, what do you mean that I got to pay more than you? And all of a sudden, it just becomes this big fight where siblings do not talk for years. So, how do you safeguard that? How do you prepare your next generation? Because unfortunately, one of the reasons why many senior citizens do not have life insurance is because they were taught, hey, your life insurance through your job is sufficient. You should be fine. But then upon retirement, they found out, hey, you can transfer it, but the cost is going to be super high now that it's not going to be attached to your job anymore. It's not group life insurance anymore. Or what they found out is it didn't transfer at all, or they maybe have left that job, got fired from that job, and their benefits were terminated. So now they're 50 age, of 50 age and older, and all of a sudden they don't have any coverage. So how do you protect yourself in that scenario? And today we're going to talk about that. So the first thing I want to talk about is understanding final expense, right? So final expense is a type of insurance policy designed to cover the cost associated with end-of-life expenses, such as funeral costs, burial costs, expenses, and any outstanding medical bills, which is huge. A lot of people don't consider the medical bills part. So this type of insurance is typically available to individuals over 50. And here's the part that I like is that there's no medical exams. Now, there are some carriers, like an independent, agent like myself. I represent multiple life insurance companies. So what that means to, that what's helpful to clients is, even though generally final expense is helpful or is available, I should say, for people over 50, there are circumstances where certain companies will have it available for individuals over 45. So in some cases it is available, and typically the cutoff is 85. So you have between 50 to 85, in some cases 45 to 85. And then there's some companies that may go to 89. There's like one or two companies out there that will cover up until 89. Now, obviously the costs are going to be a little bit more astronomical for those individuals. So why would seniors need final expense? Well, as we age, we get older, we develop serious, injuries, health issues, conditions, making it harder, right? The older you get, it's going to be harder to get traditional life insurance. You're going to have to do medical exams. You're going to have to do all these things. And what happens if you decide to go with traditional, or if you try to go with traditional, the costs are going to be pretty high. It's going to be a lengthy underwriting process. And there's high chance that you may get declined, because as we get older, we have more serious health issues, or you may be rated to the point where it comes unaffordable, right? It's not even worth it at that point. And then the other thing is you have limitations on the type of products that you can get. For example, I know in some companies, most companies, when you're over 50 years old, getting a 25 or 30-year term is not available for most companies, right? So they limit you on the amounts of coverage that you can get. So this is why it's important for people to get final expense. It offers seniors the opportunity to get coverage, no need for medical exam, like I mentioned. And it could be a lifesaver for those with pre-existing conditions, right? So if you have some form of diabetes, if you may have had a stroke in the past, may have had cancer in the past, traditional life insurance policies may decline you depending on, how long ago you had it. But with final expense, because it is intended for individuals over 50 and there's limited medical underwriting, then most likely you can get approved with those. Third thing I want to go over is how final expense insurance works. Let's say that, the typical policy that you get is in range from anywhere between $5,000 up to about $40,000 in coverage. So the premiums, that's what the premiums are considered, what you pay monthly into the policy, are affordable compared to most, right? You're looking at, 60, 70, 80, 90 bucks. In some cases, if you're older, if you're closer to that, late 70s, early 80s, you're looking at maybe over 100, maybe closer to $200. Now what happens is if something were to happen, the payout period is pretty quick because it's a final expense policy. The beneficiary receives that death benefit typically quicker than a traditional life insurance. So a traditional life insurance, depending on what time frame you are in the policy, for example, if you're within a 2-year period of a regular life insurance policy, it may take a few weeks or a few months to pay out because they have that contestability time where they basically thoroughly investigate everything you said on the act because you died within a 2-year period. But traditionally, it can take a few days, a few weeks on a traditional life insurance policy. Whereas a final expense, usually within a few days, the payment is made directly to your beneficiary. And then the cool thing is, in some cases, depending on the funeral home that you're working with, you can do an absolute assignment. And what that means is if the funeral home that you're working with says, we accept absolute assignment, that means that the funeral home is going to work directly with the life insurance company, the final expense company, and they're going to say, hey, this is what the cost is. And then the funeral home is going to request an invoice and it's going to send it to the life insurance company so that you can be peace of mind. You don't have to deal with the payment part. The insurance company sends the check to the funeral home. So we've done that. We actually did that for my grandmother's funeral. And it was pretty helpful because, again, the funeral home and the insurance company are talking on that payment portion where we just kind of focus on organizing the funeral. The fourth thing I want to go over is choosing the right one. So it's important to understand these types of policies. Now, for one, there is different types of ways to get approved. There's standard and there's graded. Now, a standard policy means that as soon as something happens, no matter when the time frame is, if the individual passes away first month or second month, that the death benefit pays out as usual, pays out immediately. And then there's graded. Graded means that, hey, there was some medical conditions that we found. We're still going to approve you, but there's going to be a 2-year kind of elimination period where if the individual who's insured dies within the first 2 years, then what we'll do is we'll refund you what you paid into the policy, the premium, and we'll give you a 10%, on top of that. So for graded individuals, there's a first 2-year elimination period. Now, the reason I bring that up is sometimes when you're working with a broker like myself, our goal is to do all that homework for you to get you to try to, as best as possible, get you a standard policy, right? Whereas individuals who maybe work with one company, they're limited. So if they sell you a policy that's graded, then you have that 2-year, waiting period. Whereas somebody like myself can go do research and say, hey, even though this company is going to give you a graded policy where you got to wait 2 years, there's a 2-year waiting period. I found another company that will approve you standard from day one. Now, does that happen in all cases? No, but our goal as independent life insurance agents is, hey, we're going to utilize all the companies that we have to service the client as best as possible to put them in the best situation. So that's number one. Number two is understanding how much you want to leave behind and making sure that it's within your budget. So most of the times when we sit down with individuals, they're older, they're on Social Security, they have a budget. So our goal is to say, let's find something that no matter what type of hardships you're dealing with, you're not going to cancel this policy. Because unfortunately, before the cable bill, before the, internet, before all the fun stuff, unfortunately, people cancel their life insurance before anything when they're going through hardships. So is understanding your budget. And then number two is, in other cases, we see that siblings like to come together and say, hey, we know mom and dad are older. Mom and dad, they're at that age. Let's get together and let's pay for this policy. So they get together, they all put their portion in. So understanding that budget. And sometimes when I see that, in many cases, it just increases the amount of insurance that they can provide. So because the budget is a little bit higher. So understanding who's going to pay for it, understanding what the budget is. And then lastly is picking your beneficiary. Now, when it comes to picking a beneficiary, I like to make things as easy as possible for final expense. 1 or 2 people. Now, when you start getting to 3 or 4 people and dividing it up, you got to realize that, the most you can get in many of these final expense policies is about 40 to 45,000 in coverage. So if you split that up 4 ways, then everybody has to get their check, and then everybody has to put their portion in for the final expenses. So a lot of times I like to just leave it to 1 person or 2 people, because as soon as that person gets the check, they can pay off the final expenses and deal with it. So that leads me to the next point, is making sure that when you get final expense, choose somebody responsible, somebody that you trust, because you don't want to pick the son or daughter or the sibling that is not trustworthy, and then they run off with the money. So making sure you choose somebody. And then if you do choose somebody to be your beneficiary to your final expense policy, you can always change it in the future by simply contacting your agent like myself. We send you a form. You put the information of the new beneficiary, sign it, send it to us, and we'll send it to the carrier. So we like to do all that work for you. So, thanks for tuning in today when we talk about Life Insurance 101. We're just kind of giving an introduction to final expense. The reason I thought this was an important topic today was because there's so many individuals now, especially the Gen Xers, who are taking care of their elderly parents. And, they can be blindsided by cost of insurance, final cost. And we see it every day. We've seen it where individuals' parents pass away, and they thought they were covered in every circumstance. They didn't know what their parents had or didn't have. They assumed their parents had coverage, but then later found out that they didn't. So if you're a Gen Xer, if you're even a Gen Y or millennial, it's time to sit down with your parents and grandparents and say, what do we have? Is this still active? Going through those policies and seeing what's active and what's not, you'll be surprised that you'll find that policies you thought were active were not active anymore. Unfortunately, mom or dad or grandma changed the bank accounts and forgot to update that on the policy. Or maybe you'll find policies that you didn't even know exist. That happened to us with my grandmother. My grandfather took a policy out on her a long, while ago. And he kind of knew about it, kind of didn't. But we found it and it was able to pay out. So those are the things that you want to sit down now so that you're not blindsided. And when I say blindsided, I mean that, most of us take care of our stuff at home, right? We're covered, so our kids are covered. We have stuff for our kids. We make sure that the home's covered. But we don't think, wait, the generation above us, because we have to take care of that stuff, right? We're aging ourselves, and we say, usually now it's up to us to take care of our parents. So you don't want to be blindsided by that. So I recommend is putting something in place to take care of them if they don't have anything. And if they do, understanding what they have and making sure that everything's up to date. Because in many circumstances, I see that our elderly individuals who did get policies will have an ex-spouse, somebody who already has passed away as a beneficiary. So when something does happen to them, it's a scramble to figure out how to fix it and how do we get this money. The last thing you want to do if your loved one passes away, especially a parent or grandparent, is go through all this legal stuff or all this documentation stuff. You want to make sure that you make the process as smooth as possible for you. So if you're watching this and you're thinking, man, you know what, I want to make sure that I cover my parents, my grandparents, or even yourself with a final expense policy, feel free to DM us, reach out to us. You can give us a call at 312-970-9540, and we'll run a quote for you, see how much you're looking for, what your budget is, and we'll find the top rated companies that will protect you and your family and your loved ones. So appreciate you guys for jumping on. If you like this video, you like the content that we're providing, feel free to hit that like, share, and comment below. As always, your success is important to me. We'll see you guys out there on the field.